a discussion. Solarworld Energy Solutions made a good D-Street debut. It listed at 388.5 rupees per share. This compares with the issue price of around 351 rupees a share. Those are some visuals coming in from NSE. Kartik, who is the managing director at Solarworld Energy Solutions, joins us now to discuss on a lot of things. Of course, now they can talk about forward-looking statements as well. So, foray into modules, move away from traditional strengths, the current order booking trends as well, and also the breakup that they'll see between CapEx and Resco model going forward. Kartik, good morning. Thank you so much for joining in. Now that the stock is listed, you can give us more numbers going forward. What are the current trends looking like when it comes to your current order book, your current order inflow post the DRHP filing? What is the guidance in terms of top-line growth, profit growth? You've been looking at investing some of the amount in CapEx growth.
Good morning, ma'am. It is a very momentous day for us today. We have just got listed on the National Stock Exchange. We are very proud. All our employees are very proud. Solarworld as a company, we will continue to be an EPC company. Our CapEx investments are directed towards backward integration. We have already set up a 1.5 gigawatt module manufacturing line. We are in the process of setting up a lithium-ion cell to battery pack line. And going forward, we are looking to put in around 575 crores, which is the object of this IPO. This will be directed towards setting up a 1.2 gigawatt solar cell line. So going forward, solar market is very, very strong. It is becoming one of the most mainstream sources of power in India. We believe that there's a lot of opportunity in the market. Our backward integration will give us a lot of strength to capture a bigger market share and to grow multifold from here.
Kartik, many congratulations first up on the listing. But my question being, you mentioned the fact that you're going to deploy a lot of your IPO proceeds towards that solar cell line. What's your rationale behind entering this space? Are you focusing more towards your domestic captive consumers, or you're going to set up opportunities for the export market as well?
Sir, we are focused on the domestic consumers only. We are not looking at the export market at present. The rationale is twofold for this investment. First is risk management. If you look at an EPC company, almost 40% of our cost comes from solar panels. As we backward integrate into solar panels and solar cells, that risk climbs down to about 8%. So in a 100 rupee contract, our volatility comes down from 40% to about 8%. That gives us a lot of strength, a lot of clarity when we are bidding for contracts or giving out prices to our customers. These tend to be fixed price contracts, and this is going to be a big advantage for us. Secondly, if you look at the market currently, we buy our solar panels from a lot of large players. They charge us they make between 12 to 14% margins. As we start doing this internally, that is going to add a lot to our margins as well. So, and thirdly, I would also like to add, this helps us becoming an end-to-end supplier to our customers. We can offer a complete turnkey solution. Solar cell ALMM2 comes in from June 26. We should be one of the suppliers at that time. That will give us a big leg up.
Okay. So, Kartik, two-part question here. You said once you backward integrate into solar cells, your margins can improve. It is at 20% currently. Where do you take it to in terms of improvement? When do you commission these facilities for solar cell? And, you know, analysts generally say there has been a lot of action in the solar cell segment overall, because a lot of big players are also looking at solar cell. Everyone wants to be integrated in the entire supply chain. Do you think that is something that could put pressure on the margins, because there's so much supply coming in, there could be an impact on pricing?
So, ma'am, what you're saying is absolutely true. There is a lot of interest in our industry. It is one of the fastest growing industries, but I would say demand and supply are kind of both growing very rapidly. In terms of margins, if you look at solar panels, you look at solar cells, the margins are tremendously good. I think the margins should normalize a little bit, and that would make solar projects more viable. So we are already accounting for that, and we believe that's a very good, fantastic market to be in.
And what happens to your margins? You said it will see an improvement. Big players see 12 to 14%. You are at 20%. How do you improve that post-commissioning of solar cells facility?
Ma'am, as I said, we currently spend 40% of our project cost on buying solar panels. So if you assume that people are making somewhere between 10 to 12% margins, we will not have to pay out those margins to our suppliers because we have an in-house facility. So that margins should start accruing to us as a company, and that will definitely add to our PAT margins.
And by what kind of figure are you anticipating because of that? Kartik, do you see that 20% number going up to 22, 22 and a half, say over the next 12 months?
So EBITDA margins will be out in the market as we achieve them. But we definitely see this as a very, very good market. The margins we expect to be quite good going forward as well. I can give you an example. China, I think, did about 360 gigawatt of installations last year. Compared to that, India did about 40-45 gigawatt. I believe India's solar story is just starting with BESS coming in, and intermittency of power is not a problem anymore. So I believe this market will go from 40-45 gigawatt to maybe even close to 100 gigawatt annually. And that kind of says the story about this industry. It's a new type of technology, rapidly evolving technology, good margins, a lot of interest from a lot of industry players. So it's a good sector, and we are very well poised. We are one of the companies that is EPC focused but has backward integration. That gives us a very unique advantage in terms of our cost, in terms of our ability to execute our projects.
So the 575 crores that you are spending for that cell capacity, Kartik, 420 you use from the IPO proceeds. Where do you fund the rest from? That's part one. And part two being, what has been your debt situation pre-IPO, and what does that happen going forward now?
So debt situation pre-IPO, we were net debt negative. So we were very well capitalized. In terms of this plant, we intend to take a debt of close to about 150 to 170 crores to execute this. But since this project is mostly equity funded, you will see a very good capital base. And the idea is to have a strong capital base having a good capital base, looking at the strong growth ahead of us. I think a good capital base would help us capture a lot of that growth in the market.
All right, Kartik, a lot more questions, but we have completely run out of time. But we look forward to the updates that come by from the company in terms of CapEx, adding new capacities, and a lot more. It was a pleasure speaking with you, and we'll touch base soon again. With that, we'll slip into a short break. Up next, we'll focus on the crypto market with Ola Duden from BitOasis on the other side.